Welcome to step 3 of Tackle Trading's 7-step guide to trading. This is Coach Matt. Let's get right into it. In step 1, we started talking about the top of the markets and how to identify a bias to the S&P 500, Dow, Russell 2000, and the NASDAQ and why that's important. We talked about aggressive sectors, defensive sectors. In step 2, we talked about portfolio design, asset allocation, position sizing, bullish types of strategies, bearish strategies, neutral strategies. And now in step 3, let's talk about how we're going to find and analyze those potential trades. And like we talked about in step 1, you can go out there and scan the markets and find potential trades. You can look at all these different charts, but what we're going to focus on is the tackle trading scouting reports and how to utilize those scouting reports and how we go about that. Now, as a way of review, in step 1 and 2, we talked about market posture versus the strategy selection, making sure we're always matching the type of strategy with our own personal bias to the market. So, for example, positive 1 is slightly bullish. We want to select conservative bullish strategies, whether those are directional spreads or credit spreads. If we're positive 2 or positive 3, those are more bullish strategies. From a directional perspective, we can be a little bit more aggressive with our strategy selection the more bullish we are. Then you have your bearish ones, -1, -2, -3. The same thing goes with slightly bearish to very bearish. And then you have your zeros where you're neutral and your cash flow types of strategies really kind of live. Now, in terms of finding a potential trade, we detailed this in session 2, and there's a lot of great scanning softwares from Tastyworks to Thinkorswim to FinViz to iVest. There's a lot of great scanning softwares out there. But what we do on a weekly basis for our pro members in our community is we have this entire ecosystem that is designed to help you find, analyze, place, trade. So it really kind of eases the time it takes to go out there and perform your job as a trader, and that's to find trades and place trades. So specifically, we're going to be talking about the scouting reports here today, which are our swing trading reports. And then you have the halftime report newsletter recap, which help you with the top-down analysis on a daily basis and a weekly basis. We do the Tackle Today email as well as the Tackle 25, but specifically, let's talk about those scouting reports. Now, I'm going to go to the Tackle Trading website and I'm going to show you how to access those scouting reports, and we're going to go through one from the past so that we can show you an example of how to utilize these reports and making those decisions along the way. Now we're here at the Tackle Trading website. If I go to reports and go down to the options report, I'm going to show you just very quickly a current report. So this is the report that was posted literally to yesterday. And as you can see, we have our write-up, you have your video that goes in the report, and then you have your bullish watch list with your targets and your stops and your entries. Here's a look at the stocks from a technical perspective, anticipating a reversal breakout on CTRP, anticipating a little bit of a bullish breakout above 48 on First Solar. And so I just want to show you kind of what that report is. Here's all your bearish picks there as well with stop entries and targets. Let's go a little bit back in time so we can see how trades in an example comes to fruition. So I'm going to go all the way back to the December 1st, 2018 report here, put out there by Coach Gino. I'm going to scroll all the way down. There's the great write-up Gino did. There's the bullish list. Here's the bearish list. And I'm going to pick a stock that I've really liked from this report, and that was Goldman Sachs. Now, as you can see, our entry on Goldman Sachs was under the 188.12 barrier, and I'll show you why that's the case here in just 1 second. Our stop loss was above 190 and our target was 175 by 160. This is what we were seeing in that Goldman Sachs trade. Nice little short-term bearish downtrend, had just broken through a support zone of 210, had set a lower low, and was forming a little bit of a pattern called a low base. A low base is a technical pattern in the market that just bearish downtrend, consolidation, and it's a really easy setup at this point because we're just wanting to short it right as it goes underneath the bottom of the low base. And as you can see, we have this case study where we found the stock. It's Goldman Sachs. Ticker is GS. The sector is in the financial sector. The trend is bearish, and we found it on the options report dated December 1st, 2018. Now let's zoom in just to that specific area on the chart. So as you can see, we have our entry right there at 188, underneath 188.12, which is right underneath the very bottom of that candle that's setting the base. That is our stop loss was above the 190, which was above the breakout channel. That is our risk. So from our entry point to our stop loss, that would be our risk. Now, our first target in the report was 175, and the second target was 160. And so that's what your potential return would be. Is return profit number one would be at 175, and that's where you got to make kind of that first decision. And then as it approaches that second target at 160, that's where you ultimately lock in profit when it comes to that ultimate target area. So again, your reward to risk ratio in your first target versus your second target is going to be a little different, obviously, but our first target is where we're simply making a decision, and we base that a lot on momentum. The second target is one that we are going to lock in profit. So once again, the reported date was December 1st of 2018. The trigger actually happened on December 4th. So now what I want to do is I'm going to go into some simulated platforms. One of them is our Thinkorswim software. As you can see right here, this is our Thinkorswim broker software. I'm running a platform called the On Demand, which allows me to go back in time to a specific date to backtest studies or to show case studies or to teach from that capacity. And so we're looking at the December 4th trigger that happened on the Tuesday following the report that we put out on December 1st. So on Tuesday, it triggers down here, and at that point, we want to get into the trade. Now, as an option trader, you would be buying a put option. So what I'm going to do is I'm going to go over to the trade tab, and I'm going to buy a put option using the rules that we apply over there at Tackle Trading of 2 months plus expectation for the time, and then we buy the closest delta to 0.60, which is currently the $200 strike price. So let's just go ahead and buy one contract here, and it's going to cost us $18.28 a share. Each contract controls 100 shares, so that's going to be $1,828. So I'm going to go ahead and confirm and send that into the market. Here's Goldman Sachs. We got 135 days in the contract. No, we are not going to hold this 135. We're going to make our decisions at those targets, whether it takes a week or 2 weeks or 3 weeks for that to happen. We have one contract. Our trade price was $18.28. Here's our net liquidation, which is the current value of the contract, and we're down about $3 on the trade from the time we made the trade to what it is right now. So now let's go ahead and let's look at my second software, which is called Dynamic Trend. Now this software allows me to go back and quickly just go through some technical analysis. So we're looking at the same time frame here. There's the report date. So if I just fast forward one day, there's the trigger. So as you can see, this is where we're triggering into. Now, just to show you the recreation of the trade here, our entry was right here at about 188.12. Our stop loss was right up above the 190 area. Our first target was the 175 level, and our second target was the 150 level. So we want to make the decisions at our targets on trade management. We don't want to micromanage the trade. We set the trade, we have it prepped, let the trade work through its life cycle. So as the trade starts coming down, and as you can see, these are ticking one day at a time, we finally get down to our target at 175. Now, you're going to be tempted to lock in profit here, and if you had multiple contracts, you could certainly scale out. However, trust the trade. You have momentum to the downside. We really haven't seen any type of bullish behavior here. Everything's working the way we want to do. Now, that's easier said than done when you're just looking at the chart, but then when you're going to your broker software, and this is now on the 11th of December here, so let's pull up our broker software, and let's change this now to the 11th of December, and let's show what the decision we have to make here. So now we're looking at this on the 11th of December. It's still early in the trading day. The market had just opened up for a couple hours. So now we're looking at this at our first target. It's still kind of approaching target. We have momentum to the downside, and this is why it's a little bit of a hard thing, because now you log into your software and you're like, oh, I'm up $700. I'm up close to 30% on the transaction already, and it's only been a few days. But Don't make decisions based on profit loss. Make decisions based on the analysis. I have a good momentum to the downside here. I'm going to simply adjust that stop loss down so that I can lock in some of my profit. So I'm going to take my original stop loss that we had above the 190, and I'm just going to trail it down to make sure that I'm locked in a little bit of that profit. I want to give the trade again a little bit of room to breathe. And so now I've adjusted that stop loss, and now it's continuing to go down, going down, got momentum, no pivot changes. Now, we're seeing a little bit of change in the momentum here, right here. So right here on the 26th, here on the 24th, it hits our target. On the 26th, look at that upward movement in price. Look at that strength on the 26th. It hits our target right here on the 24th. It then starts to climb back up in price on the 26th. That right here, we want to get out. It hit our target. Let's not get greedy. Let's go ahead and lock in that profit at that point. But again, it's not based on the profit loss. It's based on the analysis. So coming back to our broker software in Thinkorswim, let's fast forward that to the 24th, and let's go ahead and lock in some profit. So now we're looking at this on our broker software. It hit our ultimate target here at about 160. It hit our target at the 160. We're up $2,454 in the trade. So what do? We right click and we close the trade. So now let's review this step by step. Step one, we went out to the option report. We found a trade. We liked the trade on Goldman Sachs. We prepped the trade. We placed the trade to get triggered under 188.12. As it approaches our first target, we trail that stop loss down. As it approaches our second target, we lock in that profit. When you're looking at this from a reward to risk ratio perspective versus probability, I want to walk through about 4 different examples of reward versus risk versus probability. The first example is when you have 50-50 probability on a potential profit versus a loss. We would call that lower probability. So when you're talking about lower probability, if the reward is not substantially greater than the risk, you'd never want to make that trade. Never. And now, if the low probability, but we have a substantial return versus the risk, then that is still an okay trade. It's not a great trade, but it's still an okay trade. If I have a 50-50 proposition and I can make $2 with a risk factor of only $1, that's still a good trade. But if I have 50-50 and my return is less than my risk, that is not a good trade. But in high probability setups, such as credit spreads, condors, and other theta positive type systems, your typical return is going to be less than the risk. But when you have 90% probability of making $1 and a 10% probability of losing $1, you still like that from a potential reward to risk ratio simply because you have a much higher probability. And then the fourth one is scenario 4, where you have a high probability, a lot of momentum going into a transaction, for example, with a fairly low risk. I call that cheap risk, and that's when your timing in placing trades is spot on. That's where we live. We live in high probability, great returns versus risk factors. Now, if you've been enjoying the 7-step guide so far, you want to get to know a little bit more about those scouting reports and everything else we do at Tackle Trader, you can sign up for a pro plan, 15 free days on us. It is a subscription after that at $97 a month, but the 15 days are free on us. You can come in there and you can check out all the content we put out there, all our blogs, those very, very important scouting reports that allows us to find potential trades, get help with analyzing those potential trades like we did on the case study in Goldman Sachs. We have 4 different reports we put out there: stock report, options report, commodity report, and the forex report. We also do a traders lounge on a daily basis to get live help from one of the coaches at Tackle Trading. So if you have a question on one of the picks in the report, you can hop right in there to the traders lounge and get help from Coach No Noah, Coach Mark, Coach Gino, and other coaches of tackle trading. We also have the coaches shows in the Cash Flow Club, where in the coaches shows we detailed those scatter report picks. In the Cash Flow Club, we go over systems, cash flow systems like cash flow condors, tackle 25, personal gold, credit spreads, and other great cash flow systems. We also do special Mind of a Trader webinars and the Tackle 100 series for those of you who are extremely new to investing and trading and don't understand what a trend or a pattern is. You have Technical Analysis 101. Those of you who are new to options trading, you have Options 101, Futures 101, as well as System Development 101. And that 15 days is free. It is on us, and you can get there by bit.ly/join tackle pro. Once again, that's bit.ly/join tackle pro and become a member of the pro community of tackle trading. And as we come to the conclusion of Module 3 of Tackle Trading's 7-Step Guide to Trading, I'd like to end by reading one of the testimonies by one of our members of the Tackle Trading community, Marco. There is no better tool for learning the financial markets. Their teaching, their content, their community, and their experience is second to none. Marco, thank you so much for being an amazing member of our community. With that said, let's move on to step 4, which is going to be plan the trade. This has been Coach Matt for Tackle Trading.